Hi everyone, greetings. Today I'm going to discuss about the monetary policy. The fiscal policy of the government is one aspect, government expenses and the taxation we talk about on the fiscal policy, and we talk about the trade policy also. So today our lesson was monetary policy. One of the other important section of the government influence is monetary policy. Using the mechanism of the monetary measure. So how to define a monetary policy? Monetary policy is a macroeconomic policy laid down by the central bank. It involves the management of money supply and interest rate. So, like fiscal policy, here also we have another like a monetary policy. We call the two weapons of monetary policy, or two important aspects of monetary policy. Monetary policy executed by using these two elements. What are two elements? Interest rate and the money supply. So money supply and interest rate. So the demand side of the economic policy used by the government of a country to achieve the macroeconomic objectives like inflation, consumption, growth and liquidity. So mainly, so money supply of the country have a great influence on the economy, the inflation, consumption, growth, liquidity, as well as the interest rates. Higher the interest rates, then people go and deposit their money in the banks, then lesser the money supply. While lower the interest rate, then more money supply, people take more loans and borrowings will be cheaper, therefore money supply will increase. So today, so we're going to understand what are the main like a type of different impacts of this changing variable monetary policy. Okay, to talk about the interest rates. So interest rate, we can say there is a price of the borrowed money, price of the borrowed money, and the reward for the savers, right? That's the interest rate. Normally in different countries there are different interest rates. Practically like the countries like USA and European countries, interest rate is always like less than 5%. But sometimes Asian countries, developing countries, interest rate is pretty higher. Like even like countries in Asian countries, we had interest rate like around 10%, sometimes 15%, right? Like sometimes even more than that. So that's why some countries actually they are paying higher, they're higher interest, they're charging normal average interest rate, but some countries the interest rate normally very low, because you can see that the tendency right now is actually having the low interest rates in the economy. So we're going to find out the main important impacts of this interest rate impact of the economy. So we'll find out what are the interest rates situation. You can see that's defined as the price of the borrowed money and the reward for the savers. So higher the interest rate is more expensive to borrow money, and demand in the economy likely to fall. When on the other hand, lower the interest rates is cheaper to borrow and demand rises. So this thing actually all the impacts, all these paragraphs I have been I summarized like this in order to can easily understand like this. So you can see I use the BLT model. You can see here effects of high interest rate on business, one, two, three, and effects on the interest rates on the consumer spending. So first one on the interest rate on business, and here for consumers, and that shows there are another one, two, and three. So that's what is effects of interest rates we are talking about under business perspective as well as the consumption also, consumer perspective. Talk about the business perspective impact. So this kind of a question in your examination that can become as like analyze question, analyze the effects of high interest rates on business, analyze the impacts of high interest rate or low interest rate. Which is high or low, you can analyze the impacts of interest rates on business. You must be able to write down both sides, either high interest or low interest. So either way, so it can be analyzed question. Even 12 marker, it can possible, because evaluate question also it can be possible, because there are so many points to write that much. Effects on high interest rate or low interest rate. Then you have to define what is interest rate, monetary policy. Most of the time, so mainly 6 markers are definitely, I can see like the more chance of coming like 6 markers this case, because effects always we can adjust with the analysis points, get the way of analyzing. So when high interest rates, when interest rates rising, so it leads to what happened, the cost will increase for many businesses. Loans and mortgages cost will be increased. That's the one first impact. When interest rates increasing, rising, the cost of borrowing will increase the business and loans. As a result of that, therefore, point you get that this will reduce the profit margin of a business organization. This will reduce the profit margin of a business organization. And also, you can see this will cut the rewards of business for the owners. you got the reward for the business from the owners. Like you can't get like a good dividend, a profit share you can't get because the high interest rates you have to pay huge amount of your income to the loans payment, and this will cut the rewards of business for the owners. And also this will lead to shrink the funds available for new investment because the investors are normally they reinvest in their money, the investment income in other projects. So as a result of that, investment will go down, and therefore lower levels of investment could reduce the growth of the business. So that lower level investment, what happens? Lower level of investment will reduce the growth of the business organizations because lower the profit, lower the investment mean reduce the growth. Like that, so you can understand there are you can see the links. This is the way low interest rate. What happened? So profit will go down, cost will increase, profit will decrease. As a result of profit decrease, their savings will decrease. The savings decrease mean investment decrease. Investment decrease mean growth decrease. Like that, you can see six-strand method. One impact, you can see how the cycle, like an impact, like a cyclical model, linking model, like a pattern. Because of this happens, like a domino effect in business. So I always been called Nelly-Bub, six-strand method. Right? Make the point, explain that point, and then link it to the case study, and then write the impact on the business organization and write business area. Like that, it's called the interrelated, like a six-strand method of writing, like a domino effect. Okay, look at another example, another linking point like that, the six-strand method. When interest rate will rises, when the interest rate increases, the second impact of interest rate increases, cost will increase for any business. The same thing, cost will increase like loans and mortgages. As a result, what happened? The purchase of capital will what happened? Discourage. The purchase of the capital goods will discourage. That is, the businesses will anyway, they are not doing any capital investments. So previously we talked about will reduce the profit margin. Here will reduce the investment on the capital good, purchase of the capital goods, machines and everything discourage. So as a result of that, what happened? Another domino effect. The business will postpone their or cancel the investment, like R&D, right? R&D means research and development. They will cancel because they don't have money to buy equipment. They don't have money to buy this new devices, technology. So this will have whatever the next benefit, next impact is. They may fail to keep up with the changes in technology. So they can't be competitive because of this situation, because they cannot adapt their business to the new technology. They cannot keep it up with the changes in new technology. As a result, this could affect their competitiveness and ability to grow. So first of all, the first point, yeah, low investment will reduce the growth. Here, because of the lack of financing and technology, the competitiveness will go down, and the ability of growing, the competitive advantage will lose. So you get the way they explain. So this is like a higher level knowledge. You can one point, you can elaborate it, and you can develop in different points, strengths. So that's why this style you can easily you can adapt to 9 markers and 12 markers. So in 9 markers we expect like this kind of 2 points, two advantages, one disadvantages, and like a conclusion. And also 12 mark also you can start the definition, two advantages and two disadvantages, and the conclusion with the application of the case study. Okay, when the interest rate rises, again the other side, increase. Another impact is consumers are less willing to borrow money, right, to fund spending. So consumers are also what happens, they don't borrow money. As a result, demand for the business organization, demand for the economy falls. Then lack of demand as a result of that, because consumers they don't have that much of money for borrowing, then their demand will fall. As a result, what happen? Have impact on every business, generic impact for every business as a result of the demand falls. Therefore, business that produce goods bought with borrowed money, right? Business that produce goods bought with borrowed money. For example, cars, like houses, apartments. These things what happen normally. Businesses that produce goods normally with the borrowed money. Sometimes there are some industries who provide like that investment, like a big, like a luxury item they are selling, vehicles, apartments, like that. So that one, what happened? Those businesses are likely to suffer most, because in now also like the some industries actually suffer most, like because of the the COVID thing. You can see the entire world suffering because of the especially for the COVID, and not only this, Even the vehicle industry, you can see car sales, they don't have that much of sales. People are not buying vehicles these days, not importing vehicles these days. People are not buying apartments because of this. People are not going for loans because some jobs are not secure. And then, so they are investing the money in other things like real estate or gold market or dollars or something like that. You can see those are the like a three impact for the business. Now we'll move on to the impact of the last session of this part is the impact on consumer side. So now business side, you know the three impacts for the profitability, for the new investment, and the consumer demand. So these another three impacts I'm going to talk about the effects on interest rate on the consumer spending for the consumer customer point of view, customer perspective. Generally, high interest rates are bad for consumers also, but not all of them. You see, is that true? Right. When interest rate rises, house owner mortgages will be affected negatively. Right. Then their housing loans, what happen? Even housing loans also get bad because that cost also will increase, which leads to increase in mortgage payments. Leads to increase their mortgage payments. Then what happen? Then they will have a less disposable income to spend. Then they will have a less disposable income to spend as a result of that. So as a result, what happens? Another domino effect. This will cut in consumer spending due to higher mortgage payment. Because you have to pay higher mortgage payment, this will cut the disposable income and less disposable income. As a result of that, they had to do a cost cutting. Their spending cuts they had to do, and as a result, severe for construction industry and housing market. Especially we're talking about the construction and housing because people will not take the money, not take the loans because of high interest rates to do the construction. As a result of that, the construction industry and housing market will suffer because many people buy housing using mortgages. That's why. Because second impact on the consumer spending, when interest rate rises, demand for goods with borrowed money will fall definitely. Not like construction thing, talking like the luxury items such as jewelry, clothing, holidays, and entertainment, something. For example, overdraft, credit cards, loans become less affordable because of the high interest rate, right? Very less affordable because of the high cost of that. As a result, demand for certain goods likely to fall. What are the demand for certain goods? Jewelry demand, new clothes, holidays, entertainment. Even like a basic consumption needs will be you can't even afford because of the borrowed money because credit card interest will increase and overdraft facilities will increase in the interest rates. Therefore, people will definitely they reduce the luxury item demand. Jewelry is a luxury item, right? Holidays are luxury item. Entertainment is a luxury item. Like that, so luxury clothes, luxury holidays, and everything will reduce, right? So you can see so also expensive items like cars, furnitures, and white goods. Yes, some of you might have some doubts of white goods. Okay, white goods. Another example of white good is like a luxury items, luxury goods. White goods is a good business term we can learn today. White goods, right, or luxury items. So demand for certain goods like to fall, certain would be white goods, right? So luxury items, another term for luxury items in business and economics we are using white goods, white goods. So also expensive items like car, furniture, and white goods also decrease. Okay. The last impact of the interest rate, we're talking about the lowest lower inside. When you said low, on the other hand, why always high, high, high? No, it can be go down also. So then what happens? Savers will be hit, right? So a lot of people like they save their money, save their income in the banks. So then what happens? They will hit because they don't get enough money in return, like especially pensioners who actually uh, right they live from their income, the interest income. They will be hit, and then their earning will be less interest on their savings. As a result, consumers are less willing to spend their earning. They are low because of that. Consumers spending will be low as a result of that. Their earning power is low as a result of that, especially the parties like retired community, after 55, after 60, normally private sector as well as public sector workers they retire, and they can actually relax life they can have in the evening of their life. So most of the retired people, they actually their survival point is their life savings, Like saving, they put in a fixed deposit and they get some interest income from it for their survival. But when the interest rate going down, means their income also, monthly income they get from the savings will go down. So most likely affected from this. This as a global population ages, that will become another problem because a lot of people nowadays, aging population become a problem now. Every country, like 20% of the population now more than 55 or 65. So as a result of this, a lot of banks and everyone they have to spend the interest rate for the people. That's why the interest rate they are reducing. So an impact of lower interest rates on saving will be left more. Right, you can see this is the in your textbook. This is how they explain everything. So in effects of interest rate on business, everything, interest rate, monetary policy, interest rate and monetary policy defining here. And then the same point that we discussed for the business community, it's mentioned there when interest rate rises, the cost will increases and profitability will go down. So everything I summarized in the table. And also purchase of capital good will go down. This discourage the capital investment because its expensiveness, R&D will go down, competitiveness will go down. And that's the second point. Third point I explained again, high interest rate usually means the demand of the economy fall. As a result, consumer demand will fall and then industry will be affected as a result of that. Right. And we talk about the impact on the consumer side, the consumer spending. There are another three impact. We talk about the house owners, the mortgage will be affected as a result of that. So people will not take going for the loans. Housing market will demand. The construction industry will hit hard because most people buy houses using a mortgage. And talk about other two impacts also for the consumer side, right? We talk about the demand for goods bought on borrowed money will fall when the interest rate rises, such as I told you, like a white good market, right? White goods mean with borrowed money can become less affordable, like to fall, like spend on less non-essential items such as jewelry, it's called luxury items, jewelry, new clothes, holiday, and entertainment, right? And this could expensive for the demand, reduce the demand for those things like luxury items such as car, furniture, and white goods. Right. So white goods mean again another name, another term for luxury item like diamond necklace, like Ferrari car, something like very expensive way. And finally, talk about the consumer spending will be as a result of interest rate lower. This will have a bad impact for the savers, saving party, saving community, like people who are relying on savings, such as retired community. They will affected largely because of the lower interest rate because as a result of the interest rate going down, their income will go down. As a result, their living standard will go down because there's another trend called population. The aging population is a global population. Aging is a trend right now. Okay, you can see the interest rate, the trending in European Union interest rate from 2006 to 2016, the last 10 years. You can see interest rate, the behavior in the European Union also. There's a tendency of not rising, falling interest rates. Falling interest rate is very low. In European Union is less than 1%. You can see how it's actually very cheaper in those countries. Okay, guys. So mainly this influence on the government is actually have a small business as well as large business. We'll see how the other past paper questions will come as a result of this. You can see here we have a few couple of MCQs. You can answer that, right? You can answer verbally or chat line. Okay, let's go to the MCQs and we'll continue this. Question number one: which of the following is a trade barrier? Trade barrier: interest rate, VAT, corporation tax, tariff. Interest rate, VAT, corporation tax, or tariff. Okay, I got answers from two students. Yes, both of you correct. Yes, thank you very much. Yeah, you're correct. Answer is D. Answer is tariff is a trade barrier. Okay, question number two. Which of these effects are likely to result from lower interest rates? Which of these effects are likely to result from lower interest rates? Savings will increase. No, definitely not. Inflation will fall. Inflation will fall as a result of low interest rate. We'll see. Consumer spending may rise. Low interest rate, that also a little bit possible. Less business investment. Less business investment. No, that cannot be happen. More investment. Okay, so again, two students answer the question. Um, yeah, some people say answer is D. Some people say answer is C. So I take the answer as the C. Yes. Yes, C is the answer. Consumer spending may rise as a result of the low interest rates because people will like to borrow more money and spend that money. Question number 3. Very good, huh? You are very talented class, I know. Everyone giving the very good answers. I appreciate that. Question number 3. Which of these measures might help a company manufacturing power boards? Which of these measures might help to a company manufacturing power board? Lower levels of corporation tax. Definitely, everyone will benefit out of it, not only the power board manufacturer. Higher VAT, no, definitely not. VAT value added tax. Higher income tax, no. Higher interest rates, no. I think, yeah, we'll see only one student gave the answer this time. Yes, your answer is correct, right? Yeah, two students actually. One is the answer. Lower level of corporation tax. Definitely, anyone, not only even like you can see significant influence on this. Any business with the low taxes, they will is a good for them because they can save more money. Okay, last one. Which of the following is likely to be rise when taxation is decreased? Which of the following is likely to be rise when taxation decreases? Tax decreases. What happened? Unemployment rise? Can't. Business investment decreases. Taxation decreases, business investment will increase. Average cost, no. Tariff, no. Answer is B. This time, two students get the answer. B, yes, correct answer given by both of you, the two boys this time. Correct answer, correct. Okay, so that's the end of the MCQ part. You can see this chapter review question part. You can see the case study, government influence of business. They have given like a nice case study about this some information regarding to the spending on expenditure motorways, some general information they have given regarding tax allowances, interest rate would be held, their current low levels in several years, corporation tax reduced by 25% to 20%, tariff will introduce, so range of imported shoes, clothes and fashion accessories, some of the some out-of-date consumer legislation would be cut. They're giving some, I think, this good business like a booster package by the like a public sector. So this is actually a 2016 the government budget planned some constraints on spending. So they have given this example like a general without mentioning a country. So what are the questions they're asking out of this information? Okay, the chapter review question they're asking what is meant by the term tariff. What is meant by the tariff is a tax on imports. Tax on import. Next, suggests two practices that consumer legislation might attempt to prevent. Consumer legislation might attempt to prevent right price increases, the product quality, something like that. Talk about those things. The legislation of the consumer, legislation controlled by the government. Describe one possible impact on business of the 20% planned spending cut on road and motorways. As a result of that, we talk about this thing in last week. Talk about the spending cut of the government will have a bad impact on the economy because infrastructure will go down. Then essential services sometimes difficult, and then the wage level will go down, and then some industries who are depending on the government orders like government contractors in private sector, they also affected by this, like road construction companies will be affected, so they also have to reduce their labor, their wage cuts are possible. These are the impacts. Describe possible impact. Yeah. So why do business prefer to low interest rates? Give two at least two reasons in your analysis. Analyze the question. Yeah. Yeah. Once when asking, like Sri Lanka is a current ban on import car is an example of a quota. No, it's actually quota means they are giving some even some percentage to import, right? Currently, you can see like our country, like mainly import. Actually, this is a ban on imported item. This is not a quota. Even they are not giving that chance. Also, it's a complete restriction. Raw materials they can import, but not the luxury items. So luxury goods import ban is there, special vehicle import ban. So this is the example of a banning, like a we call kind of a complete ban for a particular like a years. I think another 1 year, 2 year. So we almost now finish 1 year. This is the example of that. Like organizations, uh, they have like a maintaining this kind of like a complete ban is not an example of quota. Quota means it's a giving kind of a some small percentage of like a room they are allowing us to actually import. So quota or even import to export quota. So that means like giving some kind of percentage of like a less number. Let's say we allow only let's say 10,000 vehicles per year. That's a quota, vehicle quota, like that. So but this is even not allowing even single vehicle. This is a complete ban. Okay. Um, yeah, this question you can answer easily. Business prefer low interest rate. Why? Give two reasons. Why? Because we talk about the high interest rate the problems. Ne? Then you can reverse that question, reverse that points. You can see if you have low interest rate mean, then what happen? Then people have money to spend. Then business, the cost of borrowing will go down, and then their profitability will increase, and there will be easier. The impact will be good for the business organization. So the reverse side you can talk about at the time. And result of the even luxury good also. Okay, you can see like this thing like with my short note I can see these points. You can reverse now. This all points are given as a result of the interest rate increases. You have to reverse this point. What about interest rate decreases? Then you can say cost will increase. You can say cost will decrease. You can't say it will reduce the profit. It will increase the profit. So you must be able to always must be able to convert this point to positive as well as negative. So I'm giving only like a one hand, like one-sided answers. Interest rate increase, increase, increase. But a person, right? I think all of you have the brain to understand what happens when interest rate decreases. Interest rate decreases, cost will decrease, and profit will increase. As a result, what happens? Rewards for business owners will increase. No need to shrink the fund. The new funds will be available for investment. Opposite side you have right. As a result, what happened? Low level of investment, no. More investment, which increase the growth, not the reducing growth. Either you must be able to write the both sides of this kind of thing. It's a good question. Sometimes that's why always when the whatever the point we mentioned must be able to adjust it in the given depend on this given situation. Okay, assess the possible impact on the budgetary measures designed to help business. So this when you write this question, you have to focus on all these measures in the application point. Here, tax allowance, you can talk about tax. Here, talk about the interest rate, the fiscal policy impact, monetary policy impact, and corporate tax tariff, consumer legislation part. So, trading block impacts, everything. I think that's 12 mark. We can talk about more sides: fiscal policy, monetary policy, trade policy, and the government supply side policy. Everything. It's a good policy question. So, the answer for model answer for this question, I'll upload it to you later in our group. So then I'm going to right. So then this is the summary again to recap the lesson. So impact on the taxation, impact on interest rate on the business as well as the business organizations. You can summarize from here. Effects on interest rate on consumer spending and effects of interest rate on the business rates and everything. Right.